Hey guys, thanks for joining us here at Salty Ginger Talk. If you're a return listener, it's great to have you back. If you're new to the channel, really glad you joined us. Hope you like what you hear. So, we keep bringing on awesome guests. We keep finding awesome people. Tonight is no different. We're bringing Allen on. Allen's story is super interesting. He's a very bright guy. He's a very hard worker. He started from nothing and has built himself up to a really successful business person via Wall Street, via a law license, via a food business. And his story is super interesting. He's going to share his story with us, kind of educate us on some of the ways he thinks, on some of the actions that he took to become successful, some of the things he fought through, some of the challenges he had to fight to get to where he's at. And so it's going to be a great episode. So without further ado, let's bring Allen onto the channel now. All right. So, Allen, welcome to Salty Ginger Talk. Thanks so much for joining us today.
Thanks for having me, Joe. Excited to be here.
Absolutely. So, yeah, so your background's super interesting, and there's a ton of stuff to learn here. We've our the guests we have on, they're so eclectic. We have a large and wide group of people who are willing to come on and share their life experiences. We've had a lot of people who are lately who are on I'm trying to think of the right way to say it, a little more esoteric in their approach. And I think
All
yours
right.
is a lot more practical and left-brained. And so I've been looking forward to our conversation because your story is super interesting, and I'm glad we get a chance to share it with our listeners. So,
Yeah,
just
it's interesting that you chose the term esoteric. I guess there are some people that kind of pigeonhole themselves into one activity and they kind of define that as their identity throughout their entire lives. It could be counterproductive or could lead them to, greater heights. It really depends, but it just depends on what you're doing. But I took a different approach, and I basically follow where the opportunities take me and where the data takes me, and it's taken me to a lot of places in my life. So
yeah,
yeah,
that's
it's
that's
it's
uh, that's
it's
awesome. I can
interesting.
tell you, several of our last guests would not have ever used the word data to talk about how they made made their decision. So I think that's a great point to how it's different. But very briefly, if you wouldn't mind just giving our guests just a background of where you started,
You
and
want my life story?
no,
It's
not even that, because we'll get into it. But where you started and where you live now and what you do now, and then we'll fill in the blanks in between.
all right. So where I started, I got to take you back. Uh, I got to take you back actually about 25 years.
Hmm.
So where I started was I got started in proprietary trading at a very large prop firm for its day, trading stocks and stuff like that. After I got out of college. After 9/11 hit, things kind of went sideways, and I decided, all right, well, this doesn't interest me. Let me go to law school. Uh, and I was kind of on the fence between like getting into finance or getting into law. Got into law, didn't really. I got out of law school actually after 2 years and did about 7 years practicing law. At the same time, I had a side hustle that I started sometime around 2012. And it was an e-commerce side hustle. So I decided, all right, let me give this a shot. I'm going to get a list of suppliers and I'm going to market their products online and see what happens. And at that time, I was doing about at minimum, I mean, I'm not exaggerating this, but minimum 60 hours a week practicing law. At that time, I was living in the New York City area. I was living in New Jersey, right across the Hudson River. My routine was get out of bed, hop on the bus, go across the river into New Jersey, uh, from Midtown Manhattan, take a subway up to the Bronx in Court, go back down, go back across the river, go to my back office in New Jersey, rinse, repeat every single day. So 60 hours a week doing that. And I launched a side hustle with my wife, who recently, at that time, got our MBA, and things started taking off. So we started, just selling general merchandise. And as things developed and as we were able to define ourselves a little bit better, we narrowed in on the grocery category. So very similar to what you have, but it's online. And at that time, it was really unfathomable that people would be ordering groceries and something like this would take off, right? Where you would get grocery deliveries to your door. So it was really about being open-minded, giving it a shot, testing whatever is available, and it took off. I don't want to say magically took off, and there were lots of setbacks in between. But overall, I mean, it took off very well. It took off to the point where it went from, a $0 a year business started with a few $100s just by buying a list of suppliers. And eventually it became a $12 million a year business consistently. So uh, during that time, I was still paying attention to the finance side while doing e-commerce, and this happened around the pandemic. Shortly after things were settling down, I decided I'm going to revisit this. Right, I still personally traded stocks and futures and options and things like that. And I decided, well, let me see what I can do with this. And one project that I decided to take on was to build a fully automated trading algorithm that trades futures. And it's based on a lot of price action trading principles. And it's based on a lot of psychology, back tested to the point where it's highly accurate. And at that time, I was only considering trading my own money, all right, j just the funds that I accumulated. But by the same token, I also hired a statistician with a background in Python programming, and you know, they're commonly known as quants, quantitative analysts. So my side hobby included paying a quant 6 figures a year to help me build this vision. It's for me it was quite a feat. May have bitten off more than I could chew, but that was the mission I was embarking on. And as I was going to conferences and talking to other traders and hedge fund types, they looked at me and said, "It sounds like you're trying to build a business out of this." And I never really um, it was never really my intention to do that, but as I started talking to more and more people and I started showing them the data and everything like that, things started lining up. All right. So it shows a lot of promise, and we're right now at a point where we're registering a fund, and I made the quant a partner in this whole business because frankly, I need a quant if I'm going to run it. So it's very interesting. I mean, I started out basically like from less than nothing, okay, out of college. I can't even tell you how poor I was. It was ridiculous. Even poor after I got out of law school. But uh, went from that, went on to law school, practiced law, didn't like parts of it, but not really. Uh, Got into e-commerce where I launched warehouses and infrastructure and all sorts of things that attach to it. And now the e-commerce business is still running, it's still going pretty good actually. But I'm at this point where I'm also launching. For me, it's very exciting. I'm launching a fund. All right, that's going to trade futures in an automated way that limits a lot of the inherent risks in the markets. Does only intraday trading, and takes no overnight positions and has an accuracy rate of around 70%, which is pretty good by industry standards.
Love
So
it. So yeah, there's
yeah,
so much.
there's a lot going on.
I was gonna
A
say there's
lot.
so much to talk about there. So I
Yeah.
love your story because it really kind of exemplifies one of the things we talk about on the podcast a lot. So, I mean, what we try to do is get people to take control of their lives, right? Whatever it is that you want, you've got to go after it. And the way to do that is to take action. And you are a case in point of taking action, even if you don't know where those actions are going to lead you. By taking action, it leads you down a road that you wind up in a good spot because you took action. And you talked about it already, just in the brief kind of background of where you started and where you went to. That I was here and I didn't like it, so I tried something different, and that something different led me here. And I tried that, and that worked. But then I saw this over here, and I took action. And now look at all the stuff you've got going on. And so there's a great message there and a great lesson there for our listeners. That's one of the things I try to do as the host, is just to call out the common themes we hear from our guests. And our guests have been successful in a wide variety of things, some of them financially, some of them personally, some of them professionally, blah, blah, blah. But the point
Right.
is, they take action. And when they take action, good things happen. When they don't, bad things happen. And so you got to take shots. You got to take your shots. You can't be too afraid to take your shot. You can't do it, willy
Yeah.
nilly. You can't do it haphazardly, but you've got to do the right thing for you, and you got to take your shots. That's what it boils down to.
And you got to take your risks early in life. The earlier the better, because you can recover from failure when you're in your 20s. A little bit harder to recover when you're in your 60s. So
True story.
a little bit
uh,
harder. The only one I know that really recovered, well, I don't know, but it's in the history books. But the only one that actually recovered very well in their late 60s, from a massive setback was really Thomas Edison when his factories burned down, and
mm,
after that I mean, by the time he died, I think he had something like 1,100 patents to his name, but you know, um, he was underinsured. He was insured at about 30 cents on the dollar, lost all these prototypes, half of the buildings. He was 67 years old at the time, and he was ancient by those standards. And after that, he rebuilt and made more money than he ever did in his entire life. So, but you got to take
yeah.
your risks, really early. All right, you're able to bounce back from it, a lot easier. So it's very important.
Yep. So you went to Wall Street and or the financial world while you were in college or after you got out of college?
After I got out, so I got out. Well, I graduated college early. I was 19 at the time, and went straight into Wall Street. Now, at that time, we're almost the same age, I guess. I got to take you back to 1999. Jobs were almost non-existent, right? So
Yeah.
you're 1 year away from the dot-com crash. There are actually two jobs, and I verified this. Two basic jobs. All right, you're either selling finance or insurance products. You're basically a salesman, right? You're in sales back then, or you're in customer service and you have a headset on.
Mm,
And, you're kind of you just kind of lack those kind of options, like what you have today, right?
mm,
Like today, I mean, if you find yourself broke and you find yourself not doing much, you could do Uber, you could do DoorDash. I mean, make a little money. Those opportunities really didn't exist back then.
right.
So, I
No,
mean,
I remember those days. Yeah. The
yeah,
younger guy, the younger folks don't, but the way to make money back then flowed through someone else, or you had to start a business without the benefit of the internet or an application or some other platform by which you could broadcast that business to millions of people at one time. That just didn't
yeah.
exist in 1999.
Yeah, the notion of you just whipping out a camera, doing a little dance on a platform with TikTok, and then becoming an overnight sensation, propelling yourself into like a multi-millionaire, that was really unrealistic. That wasn't going to happen back then. you know so yeah, and back then it was very interesting because I mean, look, the folks, the generation before that had to endure the Wall Street crash of 87, where no jobs
Mm,
were available. They had it even worse. Prior generations even had it worse than that for whatever reason. But from where I'm sitting, it just every subsequent generation has more opportunities open than previous ones. I mean, it just seems that way. It seems like it's fact. Um, so to to basically conduct yourself within action and with a sort of despair and self-doubt, it's really pointless. You have way more opportunities that exist now than ever before, you know.
Yeah,
So,
completely agree. So you're on Wall Street. It's not awesome. You decide to go to law school. Talk a little about how you made that decision.
well, it was awesome until it wasn't.
Mm,
The money was great. I mean, I remember, sitting at a restaurant with my friends and that just graduated high school with me, and yeah, well, they were in college at the time, but yeah, sitting there and I'm ordering off the menu, and and they're like, "Alan, are you nuts? We can't afford any of this. Well, we're just gonna have water." And I'm like, all right, I'm on a different plane here. But like I said, it was awesome until it wasn't. What really what really made things go sideways, I mean, at least for me, was 9/11. So if you could picture it, uh, that morning on 9/11, I'm sitting there at 100 Wall Street, and all of a sudden we're seeing on video just an outline of a plane and a building. All right, and the supervisor's there calling the exchange to see if we're going to open up. Uh, about 10 minutes prior to the second plane hitting, it was decided, okay, the exchange is not opening. We're hightailing it out of here. We have no reason to be here. All right. The supervisor called in these cars that were a couple of the folks drove into work, and the rest of us kind of commuted. I was a commuter there, but anyway, they called over the cars, and which were actually parked towards the World Trade Center back then. So as people were running away from all the chaos, we're running towards it and trying to get out. And then the city, before you know it, the city went on lockdown. We managed to escape just maybe 5 minutes before
mm,
city completely went down on lockdown. And what was it, like maybe 10 days where there was like no communication and no, like, just no movement going on, right? So, uh, but things went sideways. I mean, I went from earning somewhere between, I don't know, like something like $1,000 a day as a 20-year-old kid back in 2001, or a 21-year-old kid back in 2001, down to maybe $200 to $300 a day if I'm lucky. And just getting lower and lower. So I'm looking at my life and I'm like, okay, well, uh, this is very unstable. All right. I need a little bit more stability in my life than this. Off to law school I went, and I found a program in California that had a 2-year program. A lot of judges actually out of Los Angeles came out of that one. And, I graduated that, came back to New York and started practicing securities law. And boy, it was nothing like it was cracked up to be.
mm.
I mean, I ended up representing parties that got burned by the dot-com crash. And, I mean, I'm looking at them and I'm thinking, well, I was shorting the dot-com crash. Why didn't you, why didn't you guys get out of it? Well, the brokers talked them into staying in. So here I am doing these arbitrations. One of my first cases was actually this guy that lost $8 million trading a very complicated option strategy, iron butterflies. He had no idea what he was doing. And my boss at the time said, "All right, you're doing this case." I'm like, "Where is it?" He goes, "It's this entire room." Right. So I'm looking at the guy's profile, and I'm thinking, who is this guy? Some old person, an elderly gentleman, maybe that was taken advantage of by his broker. He was the president of a bank. I mean, this freaking guy owned a bank. He took the risk. All right. He had his frat boy, former college roommate represent his account, and the guy lost $8 million of his money, but he still had 25 billion more left. All
And
right.
he's trying to represent himself as an unsophisticated investor that got taken advantage
He's
of.
trying to hold it out, and he's like, well, why can't the broker dealer just cut me a check for $1 million? I'll settle for that, because that's not what they do, you know?
Yeah.
So it was, I got very jaded very quick. Uh, so, So ultimately, I ended up practicing commercial litigation. It was kind of like a bread and butter kind of thing where I was representing doctors in collection cases. One thing I got out of it was it taught me how to handle high volume situations. It taught me how to handle a lot of data at one point. So, I mean, at many points during that time, I was handling maybe upwards of 2,000 cases at a time. Really just me. Sometimes I'd have an associate or a few paralegals, but a lot of the time it was almost single-handedly. And then I hired virtual assistants, and that was like in 2010. So I learned how to handle a lot of data and digest that very quickly in time for these cases to get called. And it kind of, it kind of paved the way forward to an e-commerce business because we just started listing everything under the sun. Thousands and thousands of SKUs in the catalog. And I picked up that discipline from law. And as a matter of fact, the virtual assistant I had, I carried him over. He still works for us today. I carried him over into the e-commerce side, right? So, this paralegal that was handling or helping to handle my caseload, he's now doing e-commerce. So, he's been working for us since 2010, and it grew from really an operation with me and my wife, plus the virtual assistant. We now have about 60 people working for us worldwide. Half of them are US based, and we have two warehouses, all right, East Coast and West Coast that we're running. So
Nice.
yeah. Yeah, and if you ask me what I knew about warehouses, zero. I mean, absolutely zero. You know, well, you got to start somewhere. You got to start
Yeah.
somewhere.
How'd you come across, what made you think of that opportunity? How did you decide to go into, so you're an attorney, you're practicing, first you start with securities law and then you do commercial litigation. How does that transition to, hey, I'm going to start an internet food distribution company? How'd you come across that?
Oh God. Well, I mean, are you asking how I got into e-commerce? At all? Like, why I decided to get into e-commerce, or why I decided to narrow it down to food?
Yeah. Why'd you get into it at all? Like what led you to that? There's not
Uh,
like a common path from
uh,
law to
a
e-commerce, you
couple
know?
of things. So in college, I was selling eBay. Many people were at the time. I was doing cameras, and I knew. I can't say I knew anything really. I knew what e-commerce was, basically. But what a few things that sparked it was my wife was selling books on Amazon very casually, and she got an order from a university library for a Kurt Vonnegut book. Well, and she told me about it, like how fast this order came in. She told me, she sold this book, and I went on Google. I'm not, I'm not in tune with Kurt Vonnegut. I'm not really a fan of his genre, but he died. Okay, that's why his book was very popular. And I'm like, all right, cancel this order, raise the price. And that university, she canceled that order. That university bought it again. And I'm like, all right, there's something in here. There's something to this, and I wanted to look into this further. And I've seen others, doing an online business in some capacity. Wasn't very clear whether they were profitable or not, whether it was sustainable or not. But I decided to give it a shot because here's the thing about it. What do I have to risk? Okay, what am I really risking here?
Mm.
Besides my time, which I'm already maxed out in law, right? Doing 60 hours a week. I mean, I'm doing 60 hours a week of stuff that I absolutely hate. All right. And it's not that I don't dislike the clients. I don't particularly dislike the institution, but I dislike what I'm doing. Right. So I just figured, okay, this is kind of a low risk, medium to high probability situation. Let me see what I can carve out here. Now, within e-commerce, one thing that I needed to keep in mind was how do I make it last? How do I make it sustainable? Because once I got into it, I've seen others doing it and they would get completely wiped out, right? So one way to make it sustainable was, well, at least for me, was to go as broad as you possibly can, every single category. which ultimately got defined into food because of the barriers to entry. I mean, if you think about it, what is food? Like when you look at e-commerce, typically what people look at is we want, high margin items. We want top sellers. We want, we want the hottest things that are going to sell really fast. Well, yeah, you and everybody else is aware of it too. Okay. What you got to look for in retail is turnover, right? And you're in retail, right?
Yep.
You probably deal with a lot of turnover. I'd venture to say you probably have at least a 30 to 1 turnover at any given point in time, right? So uh, that's what food offered, right? So that's what grocery offered. On top of that, it's perishable, right? So it has barriers to entry to it, right? If you have barriers to entry, you're going to deter a lot of people from getting in there, right? You're going to deter those that want to just make a quick buck and get out. So if they're there to just make a quick buck and get out, that means that could mean that, if it's profitable, if it's also going to be sustainable, all right? It's also going to be around to stay. So you have those barriers to entry. Um, you have lower price points, which are also deterrent, right? They're also a deterrent to those that just want to hop on the latest trend, make a quick buck, and get out. So that's one of the things that we're attracted for. And it's a much more complicated kind of category. You got expiration dates to deal with, right? You got these Best Buy dates to deal with. You have FDA compliance to deal with. I'm not going to shy away from anything that's reasonably compliance related, right? I'm just I mean, what's there to do? You read the rules. You read the rules. You follow them.
Mm.
Um, so all of that kind of culminated into us focusing in on that category. And eventually also we targeted the type of things that also are a barrier to entry. So like shipping glass. Uh, People don't like dealing with glass. They don't like selling it. And here we are. We're mastering how to package these glass grocery products in bulk, in a very high volume nature, meltable products. When we moved the operation to Texas, over from New Jersey, I had a big, I had a conundrum. I couldn't sell chocolate bars without them melting before the mail was picked up, because
Yep.
just because of the Texas heat. So we had to get innovative, figure out, all right, how are we going to get this from point A to point B in in the state that the customer expects. So we started innovating. We started innovating, exploring our options as to what we can do, and eventually it happened. Okay, but what we didn't do was say, all right, I'm done, move on to the next category, because that would have been a lot more costly, right? I mean, there would have been a major learning curve and additional expense into getting into that category. So we had to address these issues that we didn't really foresee early on. So that's how we're doing it. And we had to figure out the whole warehousing thing. If you go to a third-party logistics provider right now, you tell them you're dealing in groceries, they're going to turn you away. All right, because they got to log expiration dates. They got to inbound immediately. They need to cycle count. I mean, they need to do all these complex things. They need to deal with pest control. They need to deal with just a myriad of things that to others are a deterrent. To me, if I'm in it, it's a barrier to entry. Okay. I don't have to import from China, right? A lot of the products are either US based or from Europe. So, we have that going on. And eventually we graduated to the point where, we're shipping what's considered to be high risk for novices that just want to make a quick buck. And we even graduated to the point where we secured exclusive deals with major international brands. So, and we're helping to scale them out into the US. So, one thing just led to another.
Yeah, just by taking action, right? You keep taking action, you keep solving problems, you keep
Yeah,
moving forward and see where it leads you, and you deal with it. It's
yeah,
I love the chocolate story too. Yeah, and I've been in the grocery business for 30 plus years. And so I worked at, it's one of my favorite stories. I worked at the largest grocery wholesaler in the country. Most people have never heard of it. It's called CNS Wholesale, and owned by one guy. And he used to tell this story. He was trying desperately to get business with Stop and Shop because they were a huge chain on the East Coast and there's a ton of volume there and he wanted to get it. So he'd go make a pitch, he'd get rejected, go make a pitch, he'd get rejected. And he finally came back one day and said, guys, I got great news. We've got the Stop and Shop bakery business, the frozen bakery business. I'm super excited about it. And everybody looked at him and said, Rick, we don't have any freezers. And he said, yeah, that's you. Maybe you didn't hear what I said. I got the business. And they're like, Rick, we don't have any refrigerated trucks. And he said, you're not listening to me. We got the business. We're going to figure all of that out. This is our foot in the door to build a relationship. And now we're going to solve all the problems we need to solve to service this business. And that business, when I left, was somewhere close to $30 billion. And that was, way back in 2014, 2015. So you don't know where it's going to lead you, but you can't be afraid to take your shots and you got to be a problem solver if you're going to be successful. So, yeah, look, I love that story. And you're
Yeah.
right. There's all the things you talked about are inherent to the food business. And I always explain to people the business model itself is not complicated to figure out, but it's complex to deliver. So anyone that's ever passed a basic cost accounting class knows how to make money in the food business. Control costs, raise volume, keep a penny or two more a unit, and that those pennies stack up quick if it's a high volume stuff like food, right? So, but doing that, delivering it can be very complex. And to your point, if you don't know what you're doing, you can get sideways real quick. And
Yeah.
yeah, I ran the supply chain at CNS for a while, and I would go to supply chain seminars, and I'd hear the guys in the auto industry talking about, oh, I got to get parts from China, and I got to do this, and I got to do that. I'm like, hey, is any part of your supply chain that used to be alive yesterday and now it's dead and slowly rotting, and you've got to sell it in 28 days before it goes bad? Is that anywhere in your supply chain?
Right.
They're like, no. I'm like, well, that's about 25% of my supply chain. So save your slow boat to China story for someone that cares because, like, that's not hard.
Yeah, I mean, China's just kind of annoying because you might have to get one little part, one widget from China, like the left widget and the right widget from another part of China, and yeah, you're dealing with like 30 different suppliers just to build one product. But with grocery, it's a different animal. I mean, you're dealing with perishable, and we had to figure out the model. We had to make a just-in-time inventory model for it with cross-stocking, instant cross-stocking. When the deliveries come in, we had to strategically locate the warehouses. I mean, there's a lot of logistics that go into it. Not to mention, you have to deal with them motivating the staff, right? You have to deal
Yep.
with, sourcing a good team. So there's a lot that goes into it, and I can attest to, you getting business and then having to build out the infrastructure. I mean, I remember with one of our distributors, we landed, we opened up the distribution account. We landed days they could only deliver like one day a week. I'm like, all right, well, we'll just get a truck. We'll get a truck, and we'll pick it up for the remaining 4 days a week. All right, but now we need a driver. Okay, so we get a driver. I mean, just you do what you need to do to make it
Yeah.
happen, right?
Yeah, for sure.
Same thing with frozen too. I mean, God, I mean, just the machinery to package frozen, refrigerated, which we also got into because again, I believe in barriers to entry. Who else is going to ship out frozen, refrigerated? It's a pain in the ass to do, right? So we had to figure out how to do it. I had to contact a guy that I'm on really good terms with. God, I've known him, geez, about maybe 8 years already. He had to help me with the whole setup. He had to deliver the machinery. The machinery comes in all messed up from from the trucking company. And I remember that day so clearly. It was about 1:30 in the morning when they delivered. All right. They were set to deliver around 5 p.m. They delivered at 1:30 in the morning. And I'm
Yep.
seeing like parts sticking out of the plastic. And I'm like, is this supposed to be like this? I got a flight to catch at 7 a.m. I had a flight to Europe to catch at that time, all right, 7 a.m. And I'm waiting for this delivery. And I had to call up the guy that sold to me. He goes, oh dear. It's like,
Oh,
they had to fly in to fix everything. Yeah, it's something, but that you have to you have to do what it takes if you want to get ahead, you have to do what it takes. But you know, I like how you brought up taking action, but I also want to bring up some. I guess it's a process. Maybe I've been following it, informally all along, but I certainly had to apply it when it came to launching my fund. That's the theory of first principles. So applying first principles in what you're doing. So one of the things that I try to do in my decision making is first of all, boil things down to, what do you know that's absolutely true in what you're about to do in the decision you got to take. All right. Strip away all the assumptions, narrow things down, start with the very basics of what is absolutely true in such and such process or such and such decision, build it up from there. All right. And that was very important in building my algorithm. And to a large extent, that's kind of what I was doing all along, in the prior businesses that I had. There's a certain way that you take action, and that's by examining according to a first principles approach. So it's very interesting. It became a lot clearer as I was building the trading algorithm because I was all over the place. I mean, it was I was a lot of it initially was following memory, gut instinct, uh, assumptions that later on proved invalid. So it all had to be tested, right? It all had to be tested no matter what it was. Okay, so and before you roll out such a thing where you're dealing with fiduciary capital, you have to make sure that what you're doing has legs, right? That there's a foundation there, and stripping everything down to their first principles was the approach we had to use. So, yeah. It's also not as quick as just come out and take action, but think it through, take action, but don't go woe is me and my life will never change. No one's going to change your life for you. Bottom line, it's not going to happen.
Absolutely. Well, so we have some overlap, even though we just met on our first call a couple weeks ago. So,
Yeah.
and this will kind of pivot us into talking more about your fund and build in that process. But, you were one of the guys that made my life difficult because I'm sure you hedged commodity futures, and the commodity futures are a big thing in my world because you pay attention to what's the corn market going to do? What's the sugar market going to do? What's the soy market going to do? Because it's going to have an impact on grocery prices. And so you have to manage your pricing through that. And when I worked at the wholesaler, we went through a period, and I think it was 2009, if I remember right, where there was just exploding commodity markets. It was kind of a once in a generation type thing. And I was a buyer for a long time. And what used to happen, call it pre 2008, 2009, the suppliers used to be happy to have you buy in on price increases because they made their numbers for the quarter. You could buy in at a lower price, you raise your price, you make the VIG, and that's how you made some profit in the wholesale business. Well, suppliers finally got smart and said, you know what? We could keep the price increase by limiting the forward buy. So when we announce our price increase, we're going to throttle the forward buy.
Hmm.
So when I was at CNS, what the owner did, we kind of saw this price increase, this massive inflation in commodity markets coming, and he went out and got a facility for about a credit facility of about $1 billion. And there was a
Wow.
group of about 10 of us. And I mean, this is a place doing 30 billion. And, and to your point, it turns fast in grocery. And so we could take a position, and we were essentially speculating on the futures market and said, we think corn is going to go up. So let's go out and buy anything with corn in it. We're going to buy whatever, 30 weeks of supply on it. We're going to buy canned corn. We're going to buy corn checks. We're going to buy anything with high fructose corn syrup in it. And then when suppliers announce their price increase, they're not going to be able to deny our orders because we placed them before the price increase. And the group, there's about 10 of us. We met once a week and kind of speculated on where the futures markets were going to go. And we made about $150 million worth of profit on that $1 billion credit facility. So we really made it pay for the owner. But it just occurred to me you were probably one of the people that were muddying the waters, trying to figure out what the hell the
No,
futures market's
I was
doing.
back then I was trading stocks, and actually this fund is focusing on indexes. So I'll stay away from your corn. But, no, but yeah, but we're more focused on indexes. We're specifically the S&P, and we're going to go into metals and hopefully crypto as soon as the CFTC makes a decision on the framework for
Hmm,
that.
hmm.
Yeah. But but yeah, I can see that. I mean, look, speculators have an impact, but they also it's a necessary evil, right? So they do provide liquidity. But I have a question. So you were physically buying like canned corn and the corn flakes and I don't know, like popcorn and all that stuff. It-
Exactly right. That's exactly
wow.
right. And the thing that made it confusing is because, a lot of businesses use commodities as a hedge. And
Right.
so they're buying the futures with no intention of accepting the product. They're going to sell those futures at some point before that contract becomes due. And it's hard to tell how much of that activity is speculators and hedgers and how much of that activity is Kellogg's that's going to make cornflakes with it, or Del Monte that's going to can it and sell it as canned corn. So that was hard to tell who was real and how much of that activity was actually going to come to market and how much was going to get dumped right when the contracts got to maturity. And, if it all is speculators, it's going to dump the price because you've got a bunch of people selling, not a bunch of people buying. So it was,
Well,
it was
I
kind of
mean,
risky when you think about it, but we did a good job of it.
Generally you have about 3% of the market actually gets deliveries, and the rest is a lot of just hedging and speculation. So yeah,
Yeah. Yep.
it yeah, that was interesting. I mean, why not why not just buy options? Why not just buy call options on corn or something, or actually buy corn futures? Why go out and get like a whole warehouse full of the canned corn?
Because we didn't manufacture. So if we had to actually buy the contracts, like
Mhm.
we had nothing to do with the product. It was raw, you know what I mean? It's commodity
Right.
product. So we don't manufacture. We were just a distributor. So we didn't have any of the machinery or capabilities
No,
to
no,
actually
I'm
make
saying like,
product.
why not just go in the futures market and just buy corn if you think it's going up? Why not do that? Like the actual, just the financial instrument, the
Yeah,
paper.
I hear you. To be honest, I don't know. I wasn't a part of that decision. I was just a part of
Okay.
the group that got the, hey, we're gonna make money doing this, and it's up to you guys to make it happen. So,
Yeah, I mean,
um,
either way it'll work, but it seems a lot cleaner. Just seems a lot cleaner if you buy the paper instead of having to stock the whole warehouse. But yeah, you know what? A lot of you have oil traders that do something similar where they would buy tanker loads of oil just to manipulate the prices there. So
yep.
it's not too far off. It's just it's just kind of funnier when you have a warehouse full of cans of corn just for
That's
that
what we,
purpose.
That's what we did. And it's funny because the people that worked and ran in the warehouses, that used to drive them nuts because it created a lot of extra work for them because, and you run warehouses. So you've got a pick slot, which is where you actually pick the orders, and then you've got reserves. And so we were jamming up the reserves in these warehouses with speculative product. And so, a warehouse is kind of a living, breathing thing, at least the ones we ran, because they were so high volume.
Right.
My P&L that I managed there was about $450 million a week. And so all
Wow.
that product's moving through the place, and you've got to have the reserves, and you're selling to giant supermarkets and blah, blah, blah. But I would go into the warehouses, and I would explain to the guys that were working in the warehouses that like they'd grab me, the receiving supervisor would grab me, go, see that pallet? I have moved that pallet 7 times. We've spent so much in labor moving that pallet that there's no way you made money on that pallet. And so I'd walk them through the math and say, we bought the pallet at this, we're going to sell it at this. You spent your putaways cost this much, whatever. It's a quarter hour of labor. So your put away costs $7. Let's just say that you put it away 5 times, you moved it 5 times. And so you're into it $35 in labor, but I made 110 in profit. So we're still $75 to the good. And now multiply that across the entire pallet. So it's making money. I know it's frustrating, and I appreciate what you guys are doing, but like this is one of the ways we keep the lights on and pay the bills. So
Yeah. It's difficult to comprehend though because they're just to them it looks like they're just shifting inventory from one side to the other, and they just don't get what's going on there.
Yeah,
So
yeah, exactly. Exactly. So talk a little bit about and I'm not asking you to talk about anything proprietary here, but you had to build this algorithm. It doesn't sound like you had any experience building this algorithm. So how did you solve that problem?
in
Walk us through that process.
in building the algorithm, zero experience in the programming, but in the concepts itself, the actual principles behind it,
Mm,
just a wealth of experience. I mean, experience going back to 1999. I fine-tuned it again back in about 5 years ago. Brushed up on that, and there. I mean, I could talk a lot about it. And it's not proprietary, but it's all based on human nature. This is what I love about it. So you can have something called a two-legged pullback. All right, and what that really means is let's say you have let's say you have it doesn't matter if it's a stock or a commodity, anything, and it doesn't matter what year it is. It doesn't matter if it's 2025, 1925, or even 1625. It's all going to be the same because it's all based on human nature. And the algorithms that we see working Wall Street these days are also based on human nature. But let's say you have something called a two-legged pullback. That's actually a series of bars. Let's say it's going up. So you have a series of bars going in one direction. You're going to have in a two-legged pullback scenario, you're going to have a situation where uh, you're going to have short sellers that are trapped, surprised by a two-legged pullback, and you're going to have people taking profits, and you're going to have long sellers that were trapped out of the market, basically on a missed opportunity. And the principle of this dictates, and this is all based on, real, just human nature. The principle of this is everyone's waiting to get in on a pullback there. So the shorts they want to mitigate their losses or break even. They average in. So they're going to wait for a pullback. So to buy back their position to offset it. The longs are waiting for a slight pullback to get in cheaper on hopes that it's going to go higher. So you have a lot of built up energy just waiting to get in on a shallow pullback. So if you have a pullback that's, let's say, between 30 and 50% from the high of these bars, that's really the opportunity to get in, and you get what's called a measured move, which is basically the bars repeating themselves in the same length, right? So let's say the first set of bars, and I know this sounds boring as shit, but
no, it's not. I love
it's really
this.
good.
Keep going. I love
But
it.
let's say you have three bars, right? In a two-legged pullback. In the first leg, let's say you have three bars. So if it moves 5 points in one direction, drops down, let's say maybe a point or two as a pullback, people are going to get in. You're going to have a lot of participants getting in. They're going to be institutions, they're going to be retail, they're going to be algorithm driven, but they're waiting for that right spot where you have a shallow pullback to get in again because they're expecting the same thing to repeat itself. All right, they're expecting another 5 points to the upside based
Mm.
on the previous, right, the previous upward activity. And the way I guess one of the better ways you can describe it is this kind of momentum is if you bounce a ball up a set of steps, right? Let's say you bounce the ball really hard up a set of steps. It's going to repeat itself, all right? It's going to repeat itself from, the first step to the third step, all right? It's going to drop a little, go to the fifth step. But and with every little leg, with every subsequent leg that you get, you have a lower probability that it's going to succeed. So once you get in on the retracement of the first pullback, you have about an 80% chance that you're going to get a second leg up. All right. And that's your opportunity. That's your opportunity to go in. And you have to make sure that it's a shallow pullback, that it doesn't retrace more than 50%. But that's how you do it. And you have to stay patient. And one of the ways that retail traders, the way they wipe out is, there's a saying, 90% of the traders lose 90% of their money within 90 days. And that has to do with lack of consistency. They just really have a problem sitting on their hands. That's really where you have to. I don't call it inaction, but that's where you have to, really evaluate. Are you going to take this or not? All right, because action is also dismissing it too. Are you going to take this pattern or not? And when you're holding out for, let's say, like a two-legged pullback pattern, you're going in on a very high quality, high probability trade that you can repeat over and over and over again. So, yeah, that's one of the strategies I have, and I don't even see it as proprietary. Honestly, it's human nature, and it's going to repeat itself. And one of the things about this, oh, I think my camera cut out over here. Yeah. So one of the things about this is when you have a two-legged pullback, the hardest part for a human is to judge it, not jump into too quick because you're impatient, not miss it because you're afraid of going in because it just pulled back,
Right.
but getting in very mechanically, all right, identifying it, identify the context around this. What is the market here? All right, so and there's really a whole setup that you have to go by when it comes to that. So, I mean, I could go by a lot of patterns all day long, but a lot of it is very contextual. And you plug those contextual factors into the algorithm. You plug in your knowledge into this algorithm and you test it, you validate it. And you might I've seen in the testing phase where a lot of the assumptions I had dating back to 2000, all these bad habits, a lot of them were invalidated. All right, they just didn't work. I mean, I back tested some stuff all the way back to 2010. I said, hold on a second, there's no correlation here. It was just pure
Mm.
dumb luck when it was working for me. Okay, so yeah, and that's why I took it seriously. I hired a statistician. I hired a statistician with a degree out of Columbia that did portfolio management. I mean, this is really serious stuff. Um, and we got to the bottom of it. I also enrolled him in additional training to, to better understand price action, and to better understand, how futures markets work. And from that, we were able to build a model. I mean, it was a very expensive venture. All right. A lot of pretty time consuming, very expensive. But in the end, you have a product here that, through all the testing reveals that it's about 70% accurate. And there are a lot of other strategies that are still in the pipeline that we can add to improve accuracy and to find more opportunities. So, it's pretty much just the beginning at this point.
I love it. Thanks for walking us through that. That was super
Yeah.
interesting.
It's kind of boring. I mean, like, there's some people that are like, I don't care about the markets. I just want to live my life. I want to draw or paint or whatever. But you know, to me, it's human nature, and you can't get past it. We're going to have to evolve as a species by something like 10,000 years to change what's happening. All right, and you see that in the markets. You see indecision, you see confusion, fear, greed, euphoria. It all manifests itself in the charts. And, once you're able to read the nuances of that, it becomes a very powerful instrument for you.
Yeah. Yeah. I loved it. I didn't find it boring at all. I love this stuff. And look, if you're one of the listeners that's out there, expand your mind a little bit, learn something. Like this is how you get better. This is how you improve. This is how you find new opportunities by exposing yourself to stuff that you might not know now. You've heard Alan talk about how he's done that over and over and over in his life. It's led him to a really good spot because he wasn't afraid, but he certainly didn't know how to do everything when the time came, but he figured it out. He didn't quit. He kept pushing. He applied an intelligent thought process to it and problem solved. And you can do the same thing and you're getting exposed to some really good stuff here. So,
Yeah.
I just want to call that out for the listeners. Can you explain, Alan, for the listeners? We hear algorithm thrown around all the time like it's some magical thing, but it's actually mathematical, right? So could you explain
Yeah.
what an algorithm is to the listeners?
It's basically just a set of rules you plug in, a lot of rules that you plug in into a software routine, let's say. All right. And the purpose of that is consistency. You take the emotion out of everything. So when with an algorithm, when the set of rules plugged into a piece of software is meant to detect something, it'll analyze everything bar by bar by bar, figure out the context, or at least estimate the context, and make a decision. So in the case of my algorithm, we're going off the 5 minute chart and we're analyzing every bar in relation to the entire market. And we're making a decision. Are we going to buy or sell based on what happened on the last bar? We're going to buy or sell based on what happened the bar after that, and the bar after that, the bar after that. You know, most of the time, the answer is going to be no because the quality is not high enough. It might be an opportunity, but it might not be a high quality opportunity that you want to take, especially if you're going to be dealing with fiduciary capital. So that's really what an algorithm is. It's really just a complex type of strategy that you built into a piece of software that will consistently operate as expected. All right. And if it turns out it doesn't operate as expected and there's a bug, well, you go back to the drawing board and figure out the bug. But there's no real magic to it. I mean, it is machine, uh, what's it called? I mean, I don't want to say it's AI driven. It's not quite accurate there, but it is machine learning driven because that just speeds up the process of figuring out what we need to do to make all this statistical analysis. So if there's any magic at all, quote unquote, it would be the machine learning that's behind it, right? That because it'll take a human process, a human thought process, replicate that and speed things up to get the results we need, right? To figure out what kind of rules we need to apply, what kind of context we need to apply. But when it comes to trading, when you have an algorithm, an algorithm can determine whether, in more concrete terms, it'll determine whether you have a double bottom pattern. It'll determine whether you have a double top pattern for technical analysis reasons. It'll determine if you plug it, if you integrate it in with the news, it'll determine, okay, well, the Fed's about to make an announcement, don't trade during this hour, right?
Mm,
So it can go very complex and very sophisticated, but the key to it is the emotion is out of there. The consistency is in, the emotion is out, and that's what's important. You know, it's not going to be one of those things where you have a human behind there, trading your money, and then I don't know, he has a bad day, or he misreads what's happening. This is consistency every single day. And that's monumentally important when it comes to markets. You have to be
sure.
consistent. You got to get past all the distractions and all the, sort of like deceptions and everything else that's going around in the markets and just focus on what you're doing. All right. In any given chart, like on a 5 minute chart, there are probably a good 20, 30 opportunities. You don't need to take them all. All right. Uh, Really to be viable, maybe one or two, all right, that you need to focus on. And the problem with a lot of new traders when they're in their market, when they're in the market, is they're used to always feeling the need to do something like they do at a job, right? So let's say you're, yeah, let's say you're working retail, or you're working a coffee shop or something. You feel you're conditioned to feel like being idle is bad. Well, in the case of markets, it's not that you're being idle. You're being discerning, right? You're passing on, data being shown to you. You're saying, okay, I don't think that's a high quality trade. But for a lot of newbies, they come in with this mindset where they have to always be doing something all the time, and that's when they get into trouble. That's when they fall into the trap, and eventually they wipe out, and usually within 90 days or less.
That's great. So my favorite algorithm related story actually has to do with Target and advertising. So
Okay.
they had, and this was back in the early 2000s, maybe mid 2000s, but they had applied similar algorithms like Facebook used and Google used to target consumers with specific coupons. And so they sent coupons for prenatal vitamins and diapers to a house in Minnesota addressed to the 16-year-old daughter that lived at this house. And the father is just rip shit. He's like, "What the fuck? You can't do this. My daughter's 16." What Target had done was said, people that Google these things are pregnant, and we want to send them coupons to win them over as a customer. Well, the father was all pissed off because these coupons were my daughter, so and so. Well, the daughter was pregnant. She was absolutely pregnant. She had Googled
Oh,
these sets of things, and Target knew before the parents did, based on her search engine activity being run through their algorithm. And so, like, it was a little bit creepy that they could know that before the parents that lived in the house did, but it was spot on accurate. Their marketing and advertising algorithm that they
yeah.
had built, you know?
Yeah, based on the search intent. So, and these were paid ads. So, I mean, yeah, they built out the avatar, they built out the demographic, and they built out the rules to kind of, target that demographic there. So it was it's very interesting. I mean, just the things that Meta ads and Google ads can figure out about you, and at the same time they don't really know for sure. It's all just guesswork, but it's very accurate guesswork.
Yeah. What's your fund cap or your target for your fund, and who do you think your investors are?
Depends who you ask. So my immediate target is 25 million. My immediate target is 25 million.
Hmm.
I've already kind of shown it to some brokers and things like that, and their assessment is that it could probably raise a little over 100 million pretty quickly, uh, quicker than I can imagine. So we'll see. We'll see what the future will hold there. Um, uh, the investors they would all be accredited investors. They have to be
Sure.
accredited. Minimum buy-in is $50,000 for this fund. By the same token, it's also part of a very highly regulated industry. All right, so they would get their monthly statements. There's a lot of reporting that has to go into it. I actually, I mean, it's registered with the CFTC, and which has higher standards than even FINRA,
Hmm.
which is for stocks. So, yeah, the commodities authorities, they don't play around. So it's yeah, it's really all in the up and up. But and I've seen other investment opportunities where they deal in real estate. They're just simple Reg D kind of filings. Those Reg Ds, I mean, anyone can do it. Anyone can do a real estate raise. Regulations are lax compared to the Commodities Futures Trading Commission. So. I'm waiting on their blessing. The lawyers are working on this, preparing or finalizing all the paperwork there, and we're getting ready to launch soon. It's going to be pretty exciting. It's
That
going
is
to be pretty
exciting.
exciting.
Yeah. That's
Yeah, and
awesome.
plus, all the financials are audited. They have to be audited according to the rules. They have to use GAAP accounting, which it's just held to a very, very high standard of transparency.
Mm. Yeah, we have similar audit requirements for the business that I run.
Yeah.
So yeah, I can I can vouch for that. You'd referenced crypto earlier. So crypto's still kind of the wild west as it relates to regulation, right? And so what
Uh,
talk a little bit about where crypto's at and what benefits it could have once it settles down for you.
it's taking shape. I'm by no means an authority on crypto, but it's taking shape. And you know what? You see Bitcoin traded on CNBC. You see it there. It's been already accepted by institutions. It's actually even been really accepted by the Commodities Futures Trading Commission. The only real thing that's left for them to do is to figure out the framework for it. So and when you have the Commodities Futures Trading Commission accept Bitcoin and exchanges that will trade in Bitcoin, it kind of signals that it's economically viable. So I'm not going to speak for all of crypto. There's obviously bad actors there and everything like that. But
Yeah.
when you have a bona fide exchange like that, introducing crypto trading, you could probably say it's here to stay. I mean, I'm sure there are a lot of naysayers now. Boy, do I wish I had bought into crypto in the early stages. I really should have, but uh, it's here to stay. I mean, it was the Wild West, but it's not anymore. I mean, there are a lot of regulations throughout the world when it comes to that. Uh, for example, if you go to Dubai, crypto is it's not the Wild West there. Okay,
Mm.
it's considered a virtual asset. You have to register it. You have to adhere to the marketing rules, which is the acronym there is VARA. But this is not something like it was back in the early 2010s. It's really a lot more institutionalized, a lot fewer opportunities. All right, you're rarely going to 10x your money on crypto. But it's a lot more mainstream and a lot more accepted now. So it's going to be pretty exciting. I remember even when I tried buying crypto just a few years ago, maybe 5 years ago, I get a letter from my bank just warning me never to do it again because
Mm.
they're not engaging in any kind of crypto transactions. So and that was me just putting money in Coinbase just to see what it was like, to buy Ethereum. But yeah, I got my first warning letter from my bank, and I'm like, all right, well, guess I'm not doing that again. Or if I want to, I'll have to find other means. But it's a lot interesting. You have Bitcoin is kind of treated like gold. I wouldn't say it's correlated much. I mean, we've seen it where markets are selling off with crypto markets, and uh, but maybe it's a store of value. But to make it a store of value, it has to be a little bit more stabilized. But
Yeah.
it's definitely here to stay, and there's a lot more accountability today than there was years back. Uh, I mean, you also have meme coins. You have the Haktua girl selling her meme coins and people losing millions on that.
Yeah.
I mean, you can mint a coin. You just got to do your due diligence. What are you buying here? Who are the people behind it? What's going on? You have the Trump coin. A lot of people are pissed off with the Trump coin, but there's a little bit of context to it, and yeah, it makes them money. And I'm not really taking a political side. I'm not really don't like Biden, don't really like Trump that much at all. But with the Trump coin, take it into context. You have all their bank accounts frozen. They have a lot of a lot of brand equity. All right, so what are they going to do? They're going to capitalize on the coin.
Mm.
Okay, and I was in Dubai recently. I mean, there was a guy that made $85 million, trading the Trump coin. Okay, that's life changing. All right.
Yeah.
Love the guy, hate the guy. I mean, that guy made out with 85 million bucks in a very short period of time. I think it was in like 2 weeks or something.
Good Lord.
So, yeah, just dealing with that. But, something like Bitcoin, Ethereum, I would definitely, I don't want to call it safe, but it's definitely a lot more established than it was before. I don't see myself losing my entire life savings by putting money in Bitcoin just by the nature of it and how much support and infrastructure it has around it. So yeah,
Well, yeah, and I mean Ethereum and Bitcoin, it's the blockchain technology behind them in particular that's intriguing, isn't it?
it is. Regarding Bitcoin, I mean, there's a lot of speculation as to who created it, whether it was actually created by someone that worked in the NSA. And the whole backbone to it, the whole reason why people are on board is because of how secure it is, how impenetrable it is. I mean, if you compare that to currency, to fiat, yeah, years ago you could have, I mean, you could have counterfeited very easily, right?
Mm.
The guy from Catch Me If You Can, I mean, he was literally printing money, right? Counterfeiting all sorts of money there, but. Bitcoin is not really something you can counterfeit, and at this point, not really something you can hack. Maybe with quantum computing, years down the road, maybe, maybe that'll, completely break Bitcoin, but not at this point. And Ethereum is basically the token you need to buy to be able to, buy just about any other cryptocurrency. If you would like, I mean, you have to, well, they call it gas, right? So you have to buy gas to be able to even exchange dollars for any kind of crypto. So Ethereum's here to stay. There are a lot of interesting projects with crypto, but there's still a lot of, bad actors. I'd probably divide the camp into, Bitcoin, Ethereum, maybe some others. Ripple, for example, which doesn't really seem to move much, but those seem to be a little bit safer than if you were going to go into like the Hawk Tuah coin, which is nonsense, right? So like, what's the backbone behind that? But yeah, I basically look. I don't see it as a get rich quick scheme anymore. I see it just as any other commodity. Because when I look at it, it's over $100,000. It's still it has its moments of volatility, but it's not going to go from 100,000 to a million overnight. Trade Bitcoin, trade corn, trade indexes. It's all the same at this point, right? If you're speculating.
Yeah,
Um,
well, I mean, it's that blockchain technology. There's lots of real world applications for blockchain technology now to get, in my opinion, and it's just my opinion, but it's there, you've got to overcome the institutional inertia that exists, like in the banking world or the finance world or the real estate world or the medical world. But the blockchain technology makes a ton of sense in those worlds to safely store and exchange data because it's a decentralized blockchain and that nobody is the single source of truth, and to alter it it's impossible because it's all encrypted. So it'll be interesting, at least from my perspective, it'll be interesting to see how it plays out. I mean, you existed in the financial world for a long time and still do. Do you see blockchain being a big disruptor in that industry going forward?
I mean, it kind of already disrupted things, right? So I see it as having a ton of potential. People are trying to work with it, but one of the things about blockchain is the transaction costs are still pretty high.
Hmm.
Lower than before, but still pretty high. Uh, so that's a little bit of a barrier for people. But ultimately, it's if it could be executed, it's going to make, let's say, real estate deals a lot easier, a lot more effective. Because if you could think about all the documentation you have to do in buying real estate, all the title work that has to get done, just all the money that has to trade, and then all these parties that have to come to the table, blockchain could make it a lot easier. But you know what? Even in the retail industry, blockchain it exists. I mean, Walmart is using it. Walmart is using it for their transportation logistics, right? So,
Yep.
everything's on the blockchain. I mean, heavy, heavy logistics management benefits from the blockchain. Um, it's really it's a form of accountability. It's a form of backtracking things to its original source on a massive scale. You probably have it in your own business, but you probably don't need blockchain because it's not massive enough, right? It might have to be in the tens of billions, hundreds of billions of dollars in volume uh, to kind of justify having something on the blockchain, But Walmart does this, for their trucks. I mean, they put their logistics on the blockchain, so that speaks volumes. Um, uh, you know, Everyone stands to benefit from it, but the transaction costs are still impractical, I would think, in today's time. So we need to address that issue, figure that part out. But it's there's definitely a lot of infrastructure being built around it in just about every industry. All right, whether it's the gaming industry or the food industry, retail, what have you, finance. It's just a question of how practical is it for a certain business or certain institution to have and to be on. So. we'll see what develops. I mean, I've been to a few of these blockchain conferences. You have a lot of fascinating work happening. You have in just about all industries out there.
What is it? What are the inputs that make the transaction costs high? Do you know? I don't.
It's a lot of it has to do with the tokens you have to buy to get something on the blockchain.
Mm,
So, for example, if you're minting, I'll just give just a popular example. If you're minting an NFT that you want to put on the blockchain, well, it costs money to mint an NFT. Sometimes it costs a lot more than you're willing to spend because it's just not worth it. And I don't even get me started on NFTs. Like in my eyes, it just looks so stupid. But
uh,
but but here you are. I mean, do you really want to spend the $10 to put a picture like a JPEG onto a blockchain? If you want to go into gaming, right, and you get into virtual assets, you have these frictional costs, right? People try to put casino gaming on the blockchain and having crypto. The problem with this is you have a lot of attrition when it comes to online gambling. You need a high volume business. And Joe, when I say high volume, you will not believe what kind of high volume you need. Way more than grocery. The turnover when it comes to casino, like online casino gaming, is just extremely high. And if you're adding a layer of crypto to it, you're raising the bar, you're raising the burden. Your bounce rates go higher. These prospects, right? These customers that are going to be that are interested in gambling in your casino on impulse are going to look at it and be like, well, I got to sign up for this. I got to sign up for that. I got to convert my fiat into this kind of token and then into that
mm.
kind of token. To hell with it. They're going to move on. So it's you got to remove those barriers. You got to remove the complexity and you got to remove the frictional costs that come with it.
Got it. I appreciate you walking us through that. I was not familiar with that, so it's good to
Yeah,
learn that
yeah.
stuff.
I got a little primer on online gaming. It's very fascinating because that industry, oh my God, it's just growing exponentially these days. I mean, like overall, I mean, they're experiencing like 85% growth per year. It's ridiculous.
Well, it came out of the shadows, right? I mean, when I was a kid, my dad had a bookie, and like we would literally would go to a payphone, and he would call in football bets on Saturday. He'd bet, on Saturday, he'd bet both the college and the pro games on Sunday, but that was the only way to make a bet. And now you can make a bet anywhere at any time on anything. I
Right.
don't know if you've seen it on whatever it is, TikTok or YouTube, but there's guys who have made a bunch of money because they've bet consistently that Angel Reese would miss her first shot in a game, and they keep parlaying the bet forward. And she's not a very good shooter, even though she gets a lot of publicity. And so these guys have made, I think it's over $100,000 on just parlaying this Angel Reese will miss her first shot bet over, over and over and over again. It's funnier as hell to
Yeah,
me, but
I've seen really wicked setups like for casino gambling. I mean, and you're right, anywhere. And when I say anywhere, like I mean all over the world, like all over Africa. I mean, people who just gamble right over their phones with what little money they have left, and that's it. I mean, anything you can imagine, you could place a bet on. And the thing about it is, I mean, you're doing sports betting. Your probability is about, one third of being right on any given kind of bet. So, but they don't see that. Gamblers don't really see it that way. So yeah, but the money's definitely there. I mean, it's just such a growing industry to get into, and I got quite a primer on that space. It's very interesting, but when it comes to applying crypto to it, it's too fragile of a business. I mean, we're looking at the typical gambler drops out of a casino after 6 months, right? So they're down to like something like a 30% retention rate after 6 months. And the acquisition cost of getting a customer in, it's very high. it's just extremely high. So you want to add a layer, you want to give them a reason to walk away, you know, force them to trade their money for crypto, then to trade that crypto for the token that accepts the casino, the token that works in that casino, they're going to walk off. They're going to get too fatigued from it. You know,
Yep.
the rush is going to be gone. So it's
So is their money. It's a lot harder to
yeah.
gamble when you're broke.
Yeah, but it has a huge burden. The payoff is amazing if you're a casino operator, but it's got a huge acquisition expense, very low retention, and requires very high turnover, and therefore a lot of marketing spend to make it happen.
Yeah. Yeah. Good stuff. Well, so Alan, one of the things I always do is I kind of open the floor to the guests. Is there anything I haven't asked you about that you want to talk about or make sure
Oh
our
man,
audience hears?
I don't know. We talk about so many things that are just completely left field. I mean, you got me talking about casinos. I'm not even in the casino industry.
I have
You
a
you
way
put up in
about
the
me.
before.
I get people
Yeah.
to open up.
Yeah, I don't look. It might be hard for a lot of especially suburban kids to understand this, but I when I got out of college and I definitely got out of law school, I was completely dirt poor. I mean, it was to the point where I'm looking for change in the couch cushions just to get toll money. I was
I've done
pretty
that
bad.
too. I've done that. Gone
Yeah.
to the couch to go buy a hamburger. Yes, I've done
Oh
it.
God. I guess everybody goes through that, but
Yep.
eventually you just got to evaluate and figure out what your action is. I'm just a little bit surprised by some people that see all these opportunities out there and they don't jump on. They're just they take it for granted. I mean, you know, there are cities that would pay them to move there, and they're just saying, "Oh well, nah, too far, too cold, too hot, whatever." We never had that. If we did, it was never advertised to us. But I guess during our generation, there was the opportunity was also, aside from customer service and financial instruments or selling financial products, like insurance. I guess being deployed to Iraq was an option. Joining the military,
That's true.
suit up, suit
Not a
up, and
great
get out
option,
alive
but
and get all these perks, right? So, yeah, the opportunities are just there. I mean, it's to the point where it's not whether we have opportunities, it's what opportunities do you take advantage of? So that's all I would say to the listeners out there. It's yeah, and I just feel like, every generation afterward, every subsequent generation is just luckier than the last, just by virtue of these opportunities. And it's not my words. I mean, look, Warren Buffett, Charlie Munger, they all agree, with that kind of assessment. I think you agree with that kind of assessment. I'm not trying to be this old grandpa that's telling people boring stories and offering them Werther's originals and telling them, "Oh, when I was your age, you're hard." No, it's what I see. I mean, it's just what I see. I mean, in what prior generation, if you needed money, could you just sign up to a platform, deliver a meal to someone, and get paid for it?
well,
You
and look,
know?
there's data that supports it too. There's never been a better time to be alive as a human on the planet than we live in right now. There's more people above the poverty line than ever by billions. It's not even close.
Yeah.
You've seen net worth across the globe go up more than 1,200% in the last century. Life expectancy is longer, even though we have stuff going on in the Middle East and Ukraine and Russia. It's one of the most peaceful times ever on the planet. Like statistic after statistic or item after item backs up what you just said. And to sit on the sideline and cry in your beer is fucking stupid. Like I'll say it, it's fucking stupid, you know?
I mean, yeah, it's ridiculous. Like, what are you waiting for? Are you waiting for even better opportunities in 10 years from now? I mean, it just doesn't make a whole lot of sense. I know my life would have been easier had we had these kind of opportunities. My God, like back then, I would have signed up as a freelancer. I would have done some copywriting, get a bunch of clients and build a business up really quickly that way. Or do some digital marketing for folks. But the opportunities just weren't there in the early 2000s when I was growing up, and it was even worse for prior generations. So it's just the way it is. I mean, there's a lot of opportunity out there, but I do want to stress, take action, but take action applying a first principles approach. It matters. Find out what is the truth, what are your capabilities, build up from there. Um, and you'd be surprised. And really, I mean, in hindsight, I wish I would listen more, to the world around me, like pay attention to all these cues, because I probably would have gone out, I would have probably, gone a lot farther, instead of being absorbed in my own little world, but you live, you learn.
Yeah, could be a lot worse, right? Could be a lot worse.
Yeah, I did okay. Uh,
Yeah.
but it's and if you face an obstacle, then just don't just raise your hands up in the air and go, all right, I'm done. I mean, figure out how to overcome it. Figure out first of all if it's worth overcoming, and then figure out how to overcome it. It's that simple. I mean, look, personally, there was a time after I built up my warehouses. I had three warehouses, a garage full of luxury cars, 100,000 and up, a mansion, and I was sleeping in my own warehouse for 3 weeks because everything fell apart. Okay. I was sleeping in the office of my warehouse. You know, I had a choice to make. Okay, am I gonna walk away from it all, shut my doors, go into something else, get a job, work for somebody, or am I gonna restructure, turn everything around? All right. I had no idea I had it in me. Yeah, but you're faced with a crisis, you got to confront it. You just got to do it. All right. So,
I love
yeah,
it. That's
I
that's a
told you. I
great.
mean, I had setbacks. It wasn't all. Yeah, I mean, it wasn't all just like a 45-degree angle all the way up. I mean, plenty of setbacks, plenty. Um, had under COVID during, while everyone was on lockdown, I was just like flying all over the country. Considered an essential business and all that stuff, like losing
Yep.
my mind doing that. So that was something, but you got to do what you got to do.
I love it. What a great message. What a great message. And like Alan said, it's not all rainbows and unicorns, and you're not just going to skip down the primrose path to prosperity. That's just not how life works. You're going to get kicked in the teeth every once in a while, and you got to be able to get up, take the standing eight count, and get back in the ring, man. That's just all there is to it. So,
Yeah, I mean, it's a tale as old as time. I mean, life does not just get handed down to you. Doesn't matter where you're at. Doesn't matter if you're born with a silver spoon or not. It just you're going to have your challenges, and you have to figure out how to face them.
yes. Well, Alan, thanks so much for coming on. Really appreciate it. Really enjoyed our conversation. Really appreciate you kind of educating us on stuff that I'm certain a lot of people in our audience had not heard before. And really, really appreciative of you taking the time with us tonight.
My pleasure, Joe. I'll
Yeah.
look forward
And
for
so if anyone wants to get in touch
contact
with
later.
Alan, we're going to include the links in the show notes so that you can talk to him about his fund, talk to him about the food business, or whatever might float your boat. But you're not going to have to
Yeah,
look hard for him.
anything
Just
but
go to his
legal
show
advice,
notes.
please. No legal advice.
Got it. We'll make sure. Nothing, no
All
legal
right.
advice. We don't want to get Alan in trouble. He's setting up
Yeah,
his fund and we don't
I
need the
don't need those
CFTC.
flashbacks.
Yeah, we don't need the CFTC kicking in his door.
Yeah.
Yeah.
All right.
Well, thanks so
Well,
much, Alan. Have a great
thank
weekend.
you, Joe. Take
Okay.
care. Bye.
Okay, guys, like we said, what a great conversation with Alan. What a bright guy, what a hard worker. Great success story there, starting with nothing and working and trying things, intelligently taking risks, intelligently solving problems, refusing to give up when things didn't go the way he expected them to. And look at where he is now, right? He's got the food business that's going well. He's starting up his own trading fund, and he's got that registered with the CFTC. Like, he just has really made his way in life very successfully. not because he was lucky, not because someone handed him something, but because he was smart about his approach. He worked his ass off and he refused to give up when things got tough. So there's so many good lessons to learn there. And we're just very fortunate that Allen came onto the program and shared all of those stories and lessons with us. So we just want to thank him again for spending that time with us tonight. But James puts it up over here every day. You can head over to our website, saltygingertalk.com. All the podcast episodes are available there. Links to all our social media accounts are available there. We've got a newsletter that we publish every weekday that you can subscribe to on our website. And as always, please like, share, comment, subscribe to the podcast on whatever platform you consume it on. Super helpful for us. Big thank you to Allen again. Really great conversation, really great message coming out of that conversation. You don't want to miss the guests that we have on because we have awesome guests coming on, sharing awesome stuff with you guys. So make sure you check out the next episode. We'll see you there.